Hi, I'm Hubert Senters, and in today's free trading video, let's go over one way to use CNBC. So there's obviously a bunch of different ways you can use it. I don't use it. I use it for entertainment purposes more than anything. That and Bloomberg. You really don't find very many trade ideals over there, but there is one personal finance thing that caught my eye today, which could potentially help you. So is the 30-year fixed headed to 3%? So this is going to be good information if you own your own home and you have a mortgage on your home. So you can read the article. It's on the front page of CNBC. Is the 30-year fixed headed 3%? What does that mean for you? Well, what we're going to do is we're going to grab a chart of the 30-year fixed bond, because I trade the 30-year fixed bond, and I'm going to show you what that means. And one way that you can tell whether interest rates are going higher or lower, and it's really simple to do, and you'll actually have better information than usually your mortgage broker or your bank or whoever's financing your home. So let's take a look at that. So let me clean up this chart just a little bit as I go along here and remove some of my levels that I use for intraday trade. So the first thing you need to do, which is very important, is you have to have a data feed that has the 30-year treasury bonds. Now I'm using the continuous, and the symbol that I'm using, I'm going to use my pencil here and move my keyboard out of the way so you can kind of see what I'm doing here. So the symbol that I'm using always keeps the most active 30-year bond for me, and that's at symbol and then US. And I'm using TradeStation, so that's their Globex version of a 30-year bond. Now, here's how it works. If bonds go higher, the yield on your mortgage will go lower. That's all you really need to know. Now, you can see that this is a good long signal, this is a good long signal, and this is a good long signal for several different reasons. Long, long, long. So as this is poised to go higher, your interest rate on your home mortgage should go lower. Now, I'm in the States. Usually most people either do one of three types of mortgage. They either do a 30-year fixed, a 15-year fixed, or they'll do a variable. All right, variables can be a little bit dangerous if you don't know what you're doing. They have a cap on them, but they can also make it's variable, so just they're not the best ideal. And in my opinion, I think a 15-year fixed is better than in most cases. Variable can be good if you know what you're doing, though. So if you do own your own home and if you do still have a mortgage on it, what you may want to do is take a look at refinancing your mortgage, because they've dropped another almost a full %. Then what you have to do is you just have to figure out, like, if you're doing a 30-year mortgage and you're going to save, X amount of dollars over that refinance, does it make sense financially to refinance? Because you're also going to have the closing cost in there, and you have to factor that in. And it's usually a calculation that your mortgage broker or your financial bank can help you with to say, yes, it makes sense, or no, it doesn't make sense. So take a look at doing a refinance, and you can also see that mortgage interest rates are probably going to go a tad lower, so you may still have time, but right now it's not a bad idea to go ahead and refinance your mortgage on your home if you have one. Good luck, hope it helps, and I'll see you on the next video.